Manoj, if I come back to you as well, and I think one question which is there also on the panel in terms of very high interest rates, how it used to happen in the past. And when we were chatting, you spoke about the whole ethical lending aspect and how that ethical lending code is being put out. Do you want to very briefly speak about it? I can see we are kind of getting short on time. So we'll probably keep our answers crisper
No,
on that.
I certainly want to respond on that because I also heard Sharma ji talk about very high interest rates that we charge.
Yeah,
So let
absolutely.
me, let me give you all a context. For a 100 rupee loan that you take from an MFI today, which is licensed by the RBI, you would end up paying 10 to 12 rupees as the range of interest for the whole year, right? So because we all charge about 20 to 24% reducing balance. So on a 100 rupee loan, you would essentially pay 10 to 12 rupees for the whole year. And just to put that in context, the same customer, if he or she were to take that money from a money lender, would pay that same amount per month. So essentially, we are 1/12 or 1/10 of what gets charged by private sort of money lenders. So just to put that in context, Neel, being regulated by the RBI essentially means that customer protection and the guidelines under which you have to work, because you're dealing with a very sensitive constituency of clients who are actually vulnerable because of the illiteracy at that kind of level, and the fact that most of them would not understand the numbers. The guidelines by the RBI are very clear. In fact, I would go to the extent of saying that the NBFC MFI industry today in India is the most regulated type of institution in the country. Our ticket sizes are regulated, our interest rates are regulated, our tenures are regulated, the maximum indebtedness that you can commit to a customer is regulated. Even the number of lenders who can deal with a client is regulated. To the extent that after 10 years now we are going back to the RBI and saying it's time to relook at these norms which have existed for 10 years. Please allow us some freedom so that we can actually look at the next 10 years. Right. So in terms of ethical lending, Neel, because of these conditions and the fact that there are very strict RBI guidelines to follow, most of us are by force ensured that you have to sort of subscribe to a certain common minimum program under which you work. The code for responsible lending that I was talking to you yesterday is something where the different types of institutions who do microfinance lending have come together to ensure that there is a common minimum program on which we all operate, whether it's banks or non-banks, right? And most of us, Neel, actually subject ourselves to scrutiny through the social performance measurement assessment, through smart campaign principles, so that our commitment to that particular aspect in terms of being transparent is actually checked by an external agency and certified. So we are probably one of the few types of institutions where we undergo a social performance management certification to ensure that are you giving English terms and conditions to somebody who can't even read? Are you making a customer sign on documents which you don't even explain? So all the documents have to be simple. They have to be in the local language. They have to be read out to customers so that she understands what. And do you know that any customer who takes a loan from our sector goes through at least 3 financial literacy sessions? 2 of them done by the loan officer and 1 of them done by the branch head to explain what is interest, what is meant by joint liability group, what is the credit bureau, what is the insurance coverage that you're taking, so that everything is understood by the customer, whether in writing or in terms of oral communication.